Tuned into Business Lunch. I'm Nisha Podar and with me is Mangalam Malu. Mangalam, good afternoon. Not a great day of trade today. In fact, Nifty 50 as well as Sensex closer to the low point of the day as we speak, but still showing the green tick. The major concern really is coming in from the broader markets, the mid-cap index, which is hugely underperforming the key indices today, 0.8% down on the mid-cap index, 0.6% right now. And it's the bank Nifty where there is tentativeness as well right now, but still gaining and is really taking the lead as far as the overall market is concerned. It's the big boys like Kotak Mahindra Bank as well as HDFC and HDFC Bank which are really supporting the overall markets, but some of the other financials like Indiabulls, which has recovered a slight bit right now, the kinds of Yes Bank have really dragged the market as well as the market sentiment. But take a look at Piramal Enterprises as well. While Indiabulls Group is really seeing some bit of recovery, it's Piramal Enterprises which is falling more right now, Mangalam.
Absolutely. We have a lot of stocks which are lower in trade. In fact, 3 stocks nearly in the red for 1 in the green, and this after we had more stocks in the green than in the red in the earlier part of the day. Last 2 trading sessions, we've seen the advance decline start with favor of advances and then move further apart, both those lines after intersecting. Stocks, Chain Irrigation 23% lower, Jet Airways 23% lower, Arvind, that's the one that should come up for you right now, down by about 12%. So we're seeing all of these mid-cap stocks not doing too well, and literally it's a tale of 2 cities as far as market moves are concerned, whether it be the Indian markets or the global markets. Now the Asian markets, they ended nearly at the high point of the day after a strong handover coming in from Wall Street. So we had the Hang Seng end higher by almost 600 points, the Nikkei 2 end higher by about 2 percentage point, but at the same time our markets are sitting with just about 0.25% in terms of gains. The European markets, they should come up for you by and large mixed ahead of the Fed meet outcome which will take place tonight and affect our markets tomorrow and the Asian markets tomorrow as well. Yesterday the European market saw a sharp rally after pacificatory comments coming in from ECB chair Mario Draghi. In fact, the US Federal Reserve's 2-day meeting has kick-started and the decision is due later tonight. Expectations for any policy changes are low, but investors will definitely be looking for cues ahead of about potential rate cuts in July and later in 2019. CNBC's Steve Leisman reports on what to expect from the Federal Reserve today.
Concern about weakening economies both in the U.S. and abroad and growing trade uncertainty has respondents to the CNBC Fed survey ratcheting up the chance of recession to the highest level in 8 years. It now stands at 30%, and that's up from 22% in just the last month. As a result of this increased concern about recession, the expectations for rate cuts in 2019 stands at 67%. 22% of the 45 respondents think the Fed will remain on hold. 11% actually forecasting a rate hike. On average, the group is forecasting just 1 25 basis point rate cut from the Federal Reserve. But of those who think they are going to cut rates, they think there'll be 2 this year. When will this happen? 14% think the Fed might announce a rate cut as soon as tomorrow. But 29% say it happens in sometime between July and September. 23% say after September. Why will the Federal Reserve cut? The top reason is a weakening economy, followed by inflation running below the Fed's 2% target. Some believe the Federal Reserve is responding to pressure from the markets to cut rates. Others think that the yield curve being inverted, that is with short rates being above longer rates, is pressuring the Fed. Pressure from President Trump on the Federal Reserve to cut interest rates is seen as a small factor. Kathy Bostjanek, chief U.S. financial market economist at Oxford Economics, writes in response to the survey, the Fed will signal it stands ready to cut rates if downside risks materialize, but it does not want to preemptively lower rates before seeing evidence of much slower growth in the economic data. John Riding, chief economist at RDQ Economics, says, we have marked down our forecast because of the uncertainty surrounding trade negotiations. Even if there are no tariffs imposed on Mexico and the U.S. reaches a trade deal from China, there's the uncertainty that another shoe could drop. The trouble with forecasting the economy and the Fed stems in part from the trade uncertainty. Presidents Trump and Xi now appear as if they'll meet next week in Japan. Positive meeting could remove concerns about new tariffs, which sparked the latest hue and cry for rate cuts to begin with. Or it could all go the other way.
Watch out for that entire coverage today right here on CNBC TV 18. All right, so Fed's decision is going to be extremely important, and as our correspondent from CNBC has been emphasizing, that tariff wars are something that is going to have an equal importance in what Fed decides as well. So it's a congregation of many global factors. In fact, let's get a big opinion going on this one. Let's see what Ruchir Sharma has to say on what the Fed could decide and what could be the implications.
I don't think the Fed's really going to cut tomorrow. And to be honest with you, I don't see the case for a rate cut. I think that's the more important point. The fact is that the real interest rate here, the real Fed funds rate, is just 0.5% currently. And if you just put that in the big picture, that's about as low as it has been in America's post-war history. So with a real Fed funds rate of 0.5%, do we really want lower rates at this time? When the economy, yes, a lot of the sentiment surveys have weakened, but the overall economy is still growing close to what is the new trend of around 2%. So I don't see the case for a rate cut just now.
Have a hard time really charging higher here because we are in this Goldilocks scenario where the markets are expecting 3 to 4 cuts by the Fed, number one, and number two, they're expecting this really favorable trade resolution. And I think those are two risks out there that aren't really adequately priced in. It seems like the Fed is going to have a really hard time living up to the expectations of the market.
Welcome back. The slide on a couple of these mid-cap stocks continue. Raymond is the one which has joined that list, now lower by around 4%. We were talking about Arvind, which was down by about 11% as well. But talking about volatility, India Bulls housing slide continues. But what is spooking the investors? Let's get in Abhishek. Abhishek, a fair amount of volatility there.
Well, the street is still jittery over the PIL claims that have been done, given the fact that, as per market sources, now investors' confidence has been hurt despite the fact that PIL has been withdrawn. Now, specific allegations that were made in the PIL has not been responded by the company. Let's look at the allegations and the outcome. Now, allegations were made with respect to the siphoning of funds and receiving kickbacks for loans given especially to the ADAG group. Now, company alleged that, blackmail attempts were made by unspecified persons, and later on we saw Abhay Yadav actually withdrawing the PIL, given the fact that he mentioned that he was not in receipt or his name signatory were actually misused. Now, there is no pressure sign as such in the PNL or the earnings of the company so far as of now, and the street is ignoring the fact that over the last few days there have been positive news, given the fact that pledge shares have been released. Now, there is one deal in the one BKC building being sold to Blackstone by Radius. Now, India Bulls had financed Radius over this building, and they are expected to make a recovery as and when the payment happens. Back to you.
All right. Thanks so much, Abhishek, for putting all that into perspective. So there is something which is really making the markets nervous at this point. But don't lose sight of the fact that the trio which really started the whole NBFC crisis, when the fear psychosis had really hit the overall real estate market, and the NBFCs and HFCs related to that were really DHFL, Yes Bank, as well as India Bulls group companies. And in fact, India Bulls for Housing Finance, that was one which really took a big knock at that time. So it's back to that particular set or pocket of companies which are getting impacted in the market and are under pressure. So I'm talking about Yes Bank as well as DHFL as well. So these two counters also should be on your watch list. But another one, IRB Infra is under pressure in trade after reports suggest that NHAI plans to seek new investors for Mumbai-Pune Expressway. How big a worry could that be for IRB Infra? The stock is under tremendous pressure, though has seen some bit of recovery in the last hour of trade or so. Anisha Jain joins us to put all that into perspective. Anisha.
Well, yes, IRB Infrastructure is trading lower on account of reports that have resurfaced today talking about how NHAI is looking for a fresh investor when it comes to the Mumbai-Pune Expressway. Now, do remember, this is not entirely fresh news. This is something that the company has been telling us as well as the investors over the last 1 year, that the Mumbai-Pune Expressway will be up for rebidding in August 2019. However, having said that, this is very important for the company because remember, in terms of the BOT portfolio, this is their biggest asset, contributing around 40% into the BOT revenues. And in terms of the overall revenue, this contributed around 13% as far as FY19 is concerned. However, why the street is a bit concerned about the reports today is the fact that the valuation that NHAI is looking is much higher. So, for example, in 2004, IRB had backed this particular project for a value of just around 950 crores for a period of around 15 years. And now it is going to be much lower, perhaps for a duration of 3 to 5 years, and the valuation would be much higher. And that is why the street is a bit nervous and the stock is trading lower. Back to you.
Absolutely, Anisha. Thanks a lot for that. Meanwhile, another stock which is trading lower is Gen Irrigation, trading with cuts of over 20% as India Ratings has downgraded the stock and placed it on rating watch negative, citing liquidity concerns. Remember, the stock is down more than 40% this week, almost 60% for this month. Sonal Bhutra is here with more.
Well, thanks a lot for that. And yes, as you rightly pointed out, the stock has lost close to 40% this week. It's down around 70% this year itself. That is because of the weak liquidity and also higher receivables that the company has. In fact, India Ratings today has downgraded the long-term rating of the company to IND BBB from earlier, that is IND A minus. And also they have put it under watch negative list. They cite reasons like lower liquidity because of higher receivables. Remember, their receivables increased by around 500 crores on a year-on-year basis, because of which their working capital debt has also increased to around 1900 crores this year. Also, they say that the company has not been able to meet all the requirements in terms of higher receivables this time around. Other risk that they say is the exposure to raw material price volatility. They use polymer which is linked to crude, so that price is something that hurts the raw material prices. Overall, the 74% of its total long-term obligation is in foreign currency, and they have hedged only a part of it. That will continue to put pressure on the company. They've also reported negative cash flows of around 350 crores in this year versus positive cash flows of around 850 crores in the year gone by. If you look at the FY19 numbers, well, trade receivables, they have continued to increase. The borrowings also have spiked substantially. They are sitting on a debt of around 5,000 crore rupees. Apart from that, the promoter pledge issues, they have pledged around 48% of the total promoter shareholding. All this putting a lot of pressure on the stock as of now.
All right. Thanks so much, Sonal, for getting us all those details. In fact, one particular counter that I would like to make a mention of while we were talking about IRB Infra is also the InvIT listing of the company IRB InvIT. So take a look at that as well and keep that on your watch list, because that is going to be also under pressure. And also remember the larger aspect, while most of the capital intensive companies are looking at infrastructure trust for raising funds, this could come as a bad news. On that note, take a short break on the show. But up next, a CNBC TV 18 special report